Good day, and thanks for taking the time to watch this video. My name is Matt, and I am going to take you through our investment idea for MultiChoice Ltd. Firstly, I'm just going to run through a quick MultiChoice overview. Very simply, the group creates and distributes video content to customers, and they do this through three main distribution channels: direct to the home, digital terrestrial television, and over-the-top services. Respectively, this is video content distributed by satellite, radio waves, and internet. Now, MultiChoice has been around for about 35 years, but has only been trading on the JSE since February 2019, after the group was unbundled from Naspers. The group's core operation is the DStv business, which is a household name in South Africa, where the group primarily operates. It has significant exposure to the rest of Africa, with operations in over 50 African countries. As of September 2019, the group had nearly 19 million subscribers. So moving on to our recommendation, we think that MultiChoice is a high quality stock, and in December 2019 initiated an overweight recommendation. MultiChoice is the market leader for video entertainment in Africa and is protected by what we think are high barriers to entry. Given that the population in Africa is generally quite dispersed and spread out, it lacks the infrastructure required to bring widespread internet access to Africa's inhabitants. This is the reason why connectivity is generally poor, download speeds are slow, and data is expensive, and also the reason why there's no extensive adoption to streaming services like Netflix and Disney Plus by African consumers. The group has no real competitors in the DTT and DTH space, and having been around for about 35 years, the group has built scale in these operations, allowing it to operate with lower capital expenditure relative to potential new entrants. What we have learned from the developed world streaming services is that content is key and essential to subscriber growth. Content is a strong suit for MultiChoice, with a world-class sports offering through SuperSport. Additionally, the group has a leading local content offering, which is relevant to and resonates well with the market. The group also has strong relationships with international content providers, which permit them to distribute some of the world's best content. Over the last couple of years, the group has shifted its focus to take advantage of the massive growth potential in Africa. As the workforce grows, the mass and mid-market segments are expected to grow significantly, and MultiChoice aims to capture that growth. The group is trading at a PE of around 14 times, which is its lowest since listing, and is now on a similar level to that of the JSE Cap 6. The group has a history of strong top-line growth and cash flow generation, and has a strong balance sheet with lots of cash and net assets. The group will return some of this excess cash to shareholders in the form of dividends towards the end of the 2020 financial year. Now, looking at a few financial highlights. On the 11th of November, MultiChoice released interim results for the period ending 30 September, and shares were down by as much as 3% on the day, but recovered to end the day flat. Most of the movement was already reflected in the share price, since about a week prior, the group issued a trading statement indicating that core headline earnings would be between 20 and 25% higher than the prior year. The group was able to grow revenue by about 4% despite the tough economic climate and the decision not to increase premium subscription fees. The main components of revenue are subscription revenue, which was up about 4%, and then to a lesser extent, revenues made up with advertising revenue, which was down by about 2%, and set-top box revenue, which was down about 5.7%. EBITDA in South Africa continues to grow, and losses before interest, tax, depreciation and amortization in the rest of Africa are being reduced. Overall, EBITDA for the group is trending upwards and expected to increase over the short term. Both core headline earnings and free cash flow increased over the period, and the group's balance sheet remains strong, with nearly 10 billion rand in net assets, of which close to 7 billion rand is cash. The group paid no dividend, but plans to pay dividends towards the end of the 2020 financial year. So looking at the group's prospects, we expect revenue to continue growing as the group further targets the mass and mid-market sectors. MultiChoice aims to ramp up local content financed by cost savings. They aim to expand the OTT offering and leverage new local productions and global sports events to attract and retain subscribers. For the South African segment, the group aims to deliver stable profit margins and cash flows, and they aim to return the rest of Africa segment to profitability in the medium term by focusing on driving scale and managing costs. It was mentioned in the pre-listing statement that the board aims to declare a dividend of 2.5 billion rand for the 2020 financial year, which the company currently intends to be paid out of capital. In the interim report, the group indicated that they are on track to declare the dividend by year end. If you would like to place a trade, please speak to your financial advisor or contact the trading desk. The full investment idea report can be found on PSG Wealth's online trading platform. Before we end off, please would you take note of the following disclaimer. Thank you.